Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do you got going on? We got the Trump euphoria, right? Continuing to press markets higher. The euphoria of electing President Trump is just sending all markets higher. A lot of people making a lot of money. And we're going to talk about that. We're going to talk about which markets he can save and which markets he cannot save. Now, he is the Bitcoin president. I'm going to start off with that. We're going to get over into the housing market shortly here. A lot to talk about in the housing market. Very fascinating stuff. Stay with me. Let's start with the Bitcoin market, right? Bitcoin was trading about 70,000. Then the Donald got elected. Now we're at 90,000. Okay, so up about what, 30%? Not a bad weekly return, right? Up about 30%. The Donald, he's going to be a Bitcoin president. He's going to send Bitcoin to the moon. Now you better get some because it's going well north of $1 million. I was just listening to a podcast. Oh, these Bitcoiners. I love the Bitcoiners. I actually like Bitcoin. People don't get that, but I actually do. But okay, so this Bitcoin podcaster, he says the Donald's plan is to replace the dollar with Bitcoin, right? He's going to replace the dollar with Bitcoin. It's not, now Bitcoin is priced in Satoshis. It's going to be $1 for one Satoshi, and it's going to replace the dollar. Now that's fascinating to me that they would even believe such a thing, but a lot of Bitcoiners do believe that, right? And it's going to push Bitcoin well past $1 million. Now, the word dollar, a lot of people don't know this. The word dollar comes from the word thaler, right? Thaler, Thaler. This was it was a silver coin of the Holy Roman Empire, right? It was silver. Thaler turned into dollar, and they both mean the word silver, basically. They don't mean Satoshi. I'm afraid they don't, right? Okay, they mean silver, and I do believe that silver will come back and be money again. They took the money out of our silver coins. They used to be money, used to have real silver in them. The dollar was basically a silver dollar, right? It was priced in silver, but okay, that's all changed now. But okay, so Bitcoin, 30% it went up. Okay, since the Donald's election. Now, what else went up? Let's look at Tesla, right? Tesla was trading at $240. When the Donald got elected, shot up to $360, went up 50%. Bitcoin went up 30%. Tesla up 50%. That's pretty good, right? That's pretty good. Okay, now that's part of the Cantillon effect, Elon being closest to the money, so his stock moved probably the most. But it didn't move the most, right? I'm going to talk about the ones that, well, these have basically tripled. I'm going to talk about two stocks that have tripled in a week. Okay, Donald got elected. They were both trading around $1. Now today they're trading around $3. Now what are these two stocks? This would be Fannie Mae and Freddie Mac. Their symbols, I'm going to give you stock symbols, FNMA, Fannie Mae, Freddie Mac, FMCC, right? These are the mortgage lenders, right? They originate mortgages, and these mortgages are backed by the U.S. government, right? If you don't pay the mortgage, the government comes in and they pay the mortgage for you, right? And this creates a little bit of a problem in the housing market. We're going to talk more about that, but these stocks went from $1 to $3. Very fascinating. Now, what's really fascinating is all the institutional money that plowed in, all the hedge funds that bought these right before the election. They knew that Donald wants to take these private. He doesn't want the government to be paying all these, which is probably smart because the government has to back all these mortgages. He wants to take them private, and they take them private, they're going to get bid up. But he tipped off some people. Some people got tipped off. I mean, a lot of these hedge funds, like Bill Ackerman, he's in there trading these at $1. I think he 10 million turned into 30 million in a week. See, it's easy when you have the inside track. Just ask Nancy Pelosi, a public servant worth hundreds of millions of dollars, because she can make money by the inside track, right? Called the Cantillon effect. You get the inside information direct from the government, you go invest in it, and then you make this money. Now, me and you, we don't get the inside track. We're so far removed moved away from the government, from the money. Oh, maybe they want to shut my channel down when I explain all this to you. That's about as close as I'll get to them. But okay, anyway, so there's what's called the Cantillon effect. But these stocks went from $1 to basically $3, right? So a couple 100% up. Okay, well, that's pretty good, right? I mean, you got Bitcoin going 30, Tesla going 50, but these stocks, couple of 100%. These were the big winners, right? And I want to talk about what Donald can really save. Now, can he save the stock market? He did last time when he was elected. Can he save the housing market? He did last time when he was elected. They pushed much higher, but it's a lot different this time. I want to talk a little bit about that. We'll start with the stock market, right? Stock market, when he's inheriting it this time, it's basically 100% overvalued by the Buffett indicator, right? 208% of most, that's a record, by the way, of the stock market value to the GDP. Okay, now that's fascinating. So it's over 100% overvalued. Can he make it 300% over? Can he make it 400% over? I don't know. Maybe he can. Okay, what about the real estate market? Real estate is much more different. When he inherited it last time, which was 2016, right? That's when he was elected president last time, took that 4-year break, and we got him again for 4 more years. All right, so in 2016, the average home buyer, right, it took 24% of their income to pay the cost of their mortgage, right? So it was about $1,200. 24% of their income went to pay their mortgage, which was about $1,200. Okay, that was 2016. Where are we at today in 2024? We're pushing towards 50%. We're well above 40%, but it's almost 50%. It's 24% of your income back then. Now it's close to half of your income going to your mortgage at $2,800. $1,200 back then, $2,800. This is just the average home, about $400,000 home with the average mortgage, right? $1,200 to $2,800. Can he save that? Can he make houses go up? I don't think he can. I think it's a very different market. I think it's very unaffordable. Now, here's the thing. Okay, so it's very unaffordable. So a lot of people that have bought houses just in the last 2 or 3 years, right, they're having trouble paying for them because they bought up here at 7% interest rates. They were told the interest rates are going to come back down. They're starting to, right? Well, excuse me, the short end of the curve is coming down, but the long end's actually going up. So interest rates on mortgages are actually going higher. I do still believe we'll get above 10% once that inflation stuff comes roaring back. Now, but Mike, the Donald's got a plan. He's got his tariffs. There's not going to be any inflation. Well, you see, the tariffs are kind of inflationary, right? Okay, so let's say he puts a tariff, I don't know, 20%, 50%. He claims he's going to do 100% to some countries. Okay, who's going to pay for it? Oh, the other country's going to pay for that. I don't think so. I think the consumer's going to pay for that. But here's the other thing. It's kind of like, what are the other countries going to do to us? Well, they're going to do the same thing. They're going to have tariffs also. Now, this could be really, really bad for the economy, right? I mean, you start putting tariffs on the Apple iPhone in China. I mean, they put 100% tariff. All of a sudden, Apple iPhones get cut in half, the sales. What happens to the stock? It gets cut in half and things start to go down. These tariffs are they're a little trickier than he makes it sound. He makes it sound so simple, right? That's where all the money's going to come from. But we're going to get a lot of inflation coming. A lot of inflation. It's not going away. It's not dead. Look, I get the hope factor. I get the euphoria out there. And I'm in favor of that. Look, the euphoria is great. Hope is great. It's sending the markets up. I just think it's going to be short-lived. I think there's a lot of problems. I think that there's a lot of, I think its market's going to come in by 50% in stocks, right? 40% in houses. That's my take. I mean, that's just reverting back to normal, reverting back to the mean. Warren Buffett will tell you we're 100% overvalued, 50% overvalued. We got to come down 50%, right? So, okay, you'd have to then go up 100% just to recover. But I think the stock market will come down 50%. I think the housing market will come down 40%. But Mike, houses haven't come down. Why are they not coming down? Now, here's the thing. They start to come down in a lot of areas. You go to Florida, houses are dropping. You go to Texas, houses are dropping. Nevada, houses are dropping. A lot of places, houses are coming down. I mean, they're just starting to drop, right? But here's what's really going on in a lot of areas. Let's talk about this. It has to do with those 2 companies I just told you about. Fannie Mae, Freddie Mac, right? Okay, so like FHA mortgages, right? Those are the ones backed by Fannie and Freddie, VA loans, things like that, right? Where the people, they don't have any skin in the game. They have between 1% and 3% in the game, right? Okay, well, these mortgages are in default, right? 10% of houses that have these mortgages are not paying. Not paying. Okay, well, why not, Tom Mike? Well, there's a reason they're not paying. They can't afford it. So they stop paying. But here's the thing. They're not being foreclosed upon. 60% of them are not being foreclosed upon. Normally, people don't pay, you foreclose, the house comes back on the market as inventory and the prices start to drop. But the government has been keeping these propped up and not allowing foreclosures because of the Fannie Mae and Freddie Mac situations, right? Okay, so 60% of homes that are delinquent are forbidden from being foreclosed upon. They're in forbearance or a loan modification. You see, okay, let's say I bought a house and I put 3% down, right? I don't know, my mortgage payment's $3,000 a month. I stopped making it, right? Oh, Mike, we don't want to foreclose on you. Let's do a loan modification. I go, yeah, let's do a loan modification. You had a 30-year loan. Let's give you a 50-year loan. Oh, okay, that sounds really good. That'll lower your payments from $3,000 a month down to $2,900 a month or whatever, you know, but I can't afford $2,900. Well, why don't we pay $500 of it for you and get it down to $2,400? Now, who is we when they say we're going to pay part of it for you? Well, we is me and you, right? Look, you don't mind paying your neighbor's mortgage, right? I mean, that's the neighborly thing to do. That's the good neighbor policy. If he can't pay it, you might as well. You don't even know you're paying it, but you're paying it, right? These loan modifications are taxpayer money, and that's why that Fannie Mae and Freddie Mac have to go away, because it's sucking too much money out, right? Okay, so they're going to take them private. Maybe that's a good thing. I don't know. But the thing is, they're backed by the government. The government's the one that's backing. Now, who's the government? Government's me and you. We're the ones making those payments for people. They can't foreclose on because they got a loan modification. They can't foreclose on because they're in forbearance. Now, forbearance just means they're not paying anything at all. Well, who's responsible for that? Once again, me and you. The government's responsible. Who's the government? Government's me and you. Where's the government get the money from? Do they go out and earn the money? No, they don't earn the money. They get it from me and you, or they print it. Either way, it comes from me and you. Now, when they print it, it comes from us because our prices go up. Inflation tax, right? If they don't tell us about it, they just print the money. They don't even want to ask for the money anymore, but the money comes from the taxpayer. So all these deadbeats that are not paying on their house, don't mean to call them deadbeats, but they're not paying, right? Some of them haven't paid in over 3 years. You don't mind if your neighbor doesn't pay for 3 years and you pay it, right? You don't mind. I kind of do mind. Okay. But anyways, this is what's going on. 60% of the homes, 10% in delinquency rate in the FHA loans, VA loans, 10%, 1 out of 10, right? Okay. That's high, by the way. That's real high, but that's what it is. That's what it is. But 6 of those 10 homes, say you get 10 homes in foreclosure, 6 of them, they can't foreclose on. It's illegal, right? Because they've either in forbearance, which means they're not paying at all, or they have a loan modification, which means they're paying a lot less. And either way, we're on the hook for that. The government, me and you, the taxpayer, who gives the government the money. So my advice is to just take them off the forbearance, take them off the loan modification, foreclose on the house, put the house back onto the marketplace, get some inventory out there. See, this is where it's all clogging up, right? We do not have a free market anymore. Now, thank God Kamala didn't get in, or she'd give everybody 25 grand. She'd let those people in forbearance. She'd let them go another 5 years before she thought about kicking them out. Your neighbor may not have made a mortgage payment in the last 3 years. That's how it's going on. You don't know who these people are, right? But they're out there. There's a lot of them. There's millions of them. Okay. All right. So here's the thing. So you do this loan modification, right? You lowered their payment from $3,000 a month down to $2,400 a month. And guess what? They're still not paying, but they get a new start, right? They get a new start. So it takes about 9 months before they're going to start action against them. Double delinquencies, which is basically double defaults, it's called double defaults. These have increased about 100% just in the last year, okay? Maybe there were like 2 million last year. Now there's 4 million, right? They've increased. They've doubled. You gave them a chance, right? You gave them a loan. You let them put 1 to 3% down. They stopped making payments for a year. All right. Well, we did a loan modification. Now they stopped making payments for 9 months, and now they're in default again. Don't you think it's time to kick them out? I kind of think it is, but oh, no. 60% of them, we can't do anything with them. The government won't let us, but I hope that Donald changes that. That will get more inventory on the market. But Mike, where will these people go? Look, there's a lot of homeless people they can join, and they may be joining those ranks, but you cannot stay in your house and not pay. Go get a job, right? I mean, go mow some lawns. Do something to make your mortgage payment. Maybe you have to become a renter. You cannot afford to be a homeowner. You made it perfectly clear. You defaulted once. We remodified it. You defaulted twice. You have to go now. I'm sorry. It's the way laws work. It's the way the system works. This is why things are still elevated. They'll come down eventually once this all clears through the system. And hopefully that's what the Donald can do. Maybe he can free up the markets. I hope he can. If you like this stuff, give me the thumbs up. Why not? Why not? Punch the subscribe button. Get out there, everybody. Have a great day. We'll talk again real soon. Bye-bye now.